David saying, what are your comments about the coronavirus affecting all of this movement? I really don't have many comments on, the fundamental reasons behind these moves. I think that I personally don't have enough information really on the coronavirus. I've read articles saying that it is being overblown, and I have seen just as many articles from reputable sources saying that we're not giving enough weight, we're not giving enough significance to the coronavirus, and it's going to be much worse than people expect it to be. So it's really hard to come up with any kind of fundamental view on this coronavirus issue because there's so much information, and both sides seem to be reputable. Like in this environment with social media and how easy it is to publish opinions and views and cite different sources and statistics. Um, it's really difficult to know what the reality is. I think that even though fake news has been a term that's been in the U.S. discourse for the last few years, but there's reality to that. I mean, it's hard to kind of figure out what the true situation actually is. Um, and that's why, when it comes to trading decisions, like I'm not taking that stuff into account, especially because on the time frame that you and I are trading, the coronavirus is not going to have any impact. I mean, our stops are 5, 6 points. It's not going to matter, what the coronavirus situation is in the next 10, 15, 20 minutes or the next couple of hours. So I don't really think about that stuff when it comes to trading. But, if I were even if I were a long-term investor, I would really just pay more attention to the technicals and kind of the idea of big support and resistance, and then just manage my risk. So for example, if I'm a long-term investor and the market pulls back to really anywhere in the mid 3000s or lower half of 3000s on the S&P, I'd be a buyer at that place. And understanding that, yeah, I might be taking maybe 100 points of risk or 50 points of risk, but on the upside, I could also get a couple of 100-point reversal over the next several weeks, and that wouldn't be out of the question. I mean, the market's moved from like almost 3,400 down into the 3,100 area. We have big support here. We have this multi-month balance area high over here near 3,000 to like 3,036 or so. So if I'm a long-term investor, or not even long-term, let's say I'm a swing trader, and the market goes down here, yeah, I mean I'd be a buyer within the 3,000s, expecting some sort of mean reversion, even if eventually, let's say, this thing is gonna cause even more damage across the world, and let's say it is going to turn into a bigger thing. If I'm a swing trader and I'm buying here, it wouldn't be out of the. It would be pretty normal to get a 100-point or 200-point bounce that eventually might still get sold, and we might eventually still go lower, but I can manage my risk. I can buy in this zone, and as the market bounces, I can take some off, and I can mitigate my risk. So depending on the level of uncertainty, I can adjust my scale out targets. And, even if this area doesn't hold, if I'm using a wide enough stop as an investor or swing trader, then I don't think it's going to be a case where you just slice through and never look back. Even if this area doesn't hold first time down, let's say we do go a bit lower, I mean, it's probably going to bounce back up at least into this area and let me out at close to break even. So in my experience, even though I don't swing trade, we are looking at the market through lens of multiple time frames. And on the swing time frame and longer term time frame, unless your location is just absolutely terrible, the S&P is a very forgiving market where, you know, unless you're using a tight stop, like, it lets you out. It lets, swing traders and investors out at a very similar price, even when the trade idea doesn't eventually pan out. So, that's kind of my thought on just kind of coronavirus and, what the markets may do. It's also an election year. Seems a bit unlikely that, with the central banks pumping more liquidity, it just seems unlikely that we're just going to completely fall apart and go into like a major market crash during an election year. It seems like, all efforts will be made to keep the markets propped up, probably. But again, all those things are like, they're not in my head when I'm trading. This is just like banter at this point about like, just long-term stuff. But like, I'm not thinking about any of that when I'm preparing for the day. It's really more focused on just, hey, what has the market done? What are the areas where we can get involved? What side's in control? Where's the risk reward? We're just keeping it very technical during the day. Waleed's saying, would you say 3,000 is a good invalidation point for long-term investors and swing traders? I don't think so. I think 3,000 is a great buying point for them. I don't think that would be an invalidation point. I think that you'd probably have to go a bit lower than that to spook out long-term investors and really cause a big shift in the market psychology. I don't think 3,000 would be it. The way I see it, 3,000 is like strong support, and if you continue selling off and you don't get any kind of response at 3,000, that could change things. All right, guys, we're going to wrap it up over here. We're over an hour into this, so we're going to wrap it up here. Just talk briefly about kind of what we can expect, and then we'll call it a day. Okay, so in terms of bigger picture stuff, I think that you already kind of know, my views are there, right? We're coming down into big support. We already got a test of that support in the overnight session, and that resulted in a pretty decent bounce back up to 3182 today. So, pretty nice response on first test of that area. Now, typically the first test is the one where, we want to see that big response. We've already gotten it first time. So now if we are heading back into that area, the market could end up pushing even lower to attract buyers. But, this whole really, 3,000 all the 3,100, there's a bunch of good support areas in here. If we look at the zones chart, you can see that, on the downside, the 72 quarter, 75, 65 to 68 is a good spot. Like all of these are actually pretty decent spots for buyers to be active. And the more overextended it gets, the higher the odds of buyers stepping in. And, this 33 to 36 quarter is a very nice area for buyers to be active. So that's, if the market continues selling off. But I think that, so far, short term, the sellers are still quite dominant. But I think that if we get one or two more legs lower into some of these better zones, especially, into these lower zones, the lower part of the 3,000s, I think we're going to start to see long-term buyers jumping back in. And also keep in mind that, anyone who's short over the last few days is probably going to be looking to take profit as well. So, that can also provide some more fuel at these bigger areas of support. So when it comes to timing, as long as we're not in a trend down day like we were yesterday, as long as we're not seeing trend down internals and, complete trend down conditions, then, these areas can attract buyers. And because the market is so overdone and because we've had such a large move, the swing high that we're currently dealing with is all the way up at the all-time high. That's kind of the significant swing high that we're currently looking at on the daily chart, right? And the market's been selling off every single day. So, if it keeps selling off into these lower zones, right, especially like down here into that, 36 area and 17 to 36, over here, if it keeps selling off down into that area, then like on the daily chart, just a 23% bounce gets you to 3100, 3106, right, or whatever. A 38% bounce, which isn't a big deal, gets you back to 3160 again. So, if we keep selling off over the next couple of days, and that assumes that we're not significantly bouncing in between, and we just keep going down into these zones, I think that we'll get short covering, we'll get long-term buyers stepping back in over here, and this is really going to be the big picture inflection point, 3,000 to like 3,036, on the larger time frame. Like that would be, I think, a bigger picture inflection point where how the market behaves here will kind of decide the bigger picture bias, where if this doesn't hold, then I think there's going to be a bigger shift in the market. But if this holds, then we can still, kind of balance within this big range, right? We have one big balance area that developed over here. We have another one that, kind of looks like this, right? So we broke this one, we went into the next one, found buyers at larger time frame support overnight, and now if we continue going lower, well, this thing eventually could just kind of merge into one, or we could still bounce back up into the 3100s. So when it comes to thinking of this in terms of risk reward, down here, there's going to be more risk to anyone shorting at these lower prices. And the risk reward's not really going to be there for any new shorts to jump in. So really, in my opinion, the selling pressure that we're going to see, or we might see over here, is going to be from long liquidation. It's not going to be from new shorts, right? And once those longs have liquidated, then you have to question, well, what's the force that's going to continue pushing the market lower? What gets the market here is not going to be what's going to get the market down here, right? So then you're dealing with a different group of market participants, and I think that we are still in an environment where buy the dip is still a very active idea. Now, if the 3000s don't hold, I think then the psychology might change and the situation could change. But for now, I think that there are investors traders on the sidelines waiting to get in. So when you think of the market in terms of market participants, you have the longs who are already long, you have the shorts who are short, but then you have people on the sideline. And that should be taken into account as well. That's another force in the market that could come into play. So when looking at it that way, it just seems that when the market does push into this area, it's going to be a good spot for shorts to take profit. And if longs have already liquidated, then that selling is out of the picture. New shorts are not getting in the market anymore because, it's big support, so they're probably covering. So it just makes for a situation where I think that there will end up being less selling pressure. The selling could dry up, and just short covering alone could produce a bounce. And then you have, people on the sidelines who could also see that as an opportunity to buy. And then as the market starts going higher, more shorts can be forced to cover, and it kind of becomes a bit of a self-perpetuating thing that can lead to a short-term bounce. So that's the way I think it's setting up right now. Obviously, as day traders, full disclaimer, we got to take it day by day. This is kind of a bigger picture view that can still be helpful to us as day traders. It's kind of the backdrop that we're trading against and trading on, but we do have to take it day by day. We do have to time our trades appropriately and be mindful of, where the stop needs to be. Just getting the timing wrong can result in getting stopped out of a short-term idea. And your big idea might still be okay, but who cares if your trade doesn't work on your time frame. So got to be mindful of all that stuff. All right, guys, that is a wrap for today. Thanks for the questions. Hope you guys are all trading well. A lot of opportunity in the market these days. The high volatility can result in more risk, but the reality is that, in the previous regime where the average range was like 15, 20 points, we were using maybe a 3-point stop to put the trade on. Well, now we might be using a 6-point stop. But the profit target in the previous regime might also have been 6 or 8 points, whereas now the profit target might be 30 or 40 points. So even though there's technically a little bit more risk, the reward side of the equation greatly outweighs that risk. So there is a lot of opportunity in the market right now. This is a high opportunity, high volatility, high volume environment. And if you haven't traded this kind of environment before, then, it might take a couple of days to kind of get in sync with it. But I think that, practice and just focus on getting better for the next day. All right, guys, that is a wrap. Again, hope you guys are trading well. Enjoy the rest of your evening. Have a good weekend, and we'll talk same time next Wednesday. Good night.